I know we said we're done with Q2 earnings, but well, now that the smaller names are starting to file their results as a result of filing deadlines coming up, that means that we're now right back into the earnings cycle. The target of the day for us, as the headline suggests, is Guanajuato Silver, who had a decent quarter, but it didn't really stack up to Q1 2025. Production was down, and as you can imagine, that flowed through to the rest of the quarterly results, but there was still a bright spot or two that we'll get into. Let's dive in. Guanajuato Silver in the second quarter posted top-line revenue of $19 million, which was down 13% from the $21 million recorded in the first quarter of this year. That revenue figure follows the sale of 648,000 ounces of silver equivalent, which was also down 13% on a quarter-over-quarter basis from 743,000 silver equivalent ounces. Realized silver prices, meanwhile, were up 5% quarter-over-quarter, rising from $31.88 to $33.58 an ounce. While revenue was down, so too was the cost of sales, although only by 9% versus 13% for revenue. Cost of sales totaled $15.1 million versus the prior $16.5 million, which naturally led to declining mine operating income, which declined 30% quarter-over-quarter, falling from $4.8 million to $3.4 million. The bright side here is that Q2 marked the fifth consecutive quarter of positive mine operating income. Despite the positive mine operating income, however, Guanajuato still failed to post positive net income at the corporate level, with the company reporting a net loss of $3.7 million for the second quarter, which was a decline of 62% versus the $2.3 million net loss posted in Q1. EBITDA fell even further, dropping from $1.1 million into negative territory at negative $400,000. On an adjusted basis, EBITDA fell from $4.1 million to $1.9 million, marking the fifth consecutive quarter of positive adjusted EBITDA for the company. As for cash flow, mine operating cash flow before taxes dropped from $6.3 million to $4.8 million. Moving to the balance sheet, Guanajuato ended the second quarter with cash and cash equivalents of $1.7 million, which was down from $2.9 million at the start of the year, while working capital improved from negative $15.4 million to negative $6.7 million. Post-quarter end, however, this metric changed dramatically, following the company raising gross proceeds of $13 million US via a life financing, while also seeing the exercise of 6.9 million warrants for gross proceeds of $1.3 million. On the production side of things, Guanajuato Silver in the second quarter saw a total production of 659,000 silver equivalent ounces. Production here declined by 11% on a quarter-over-quarter basis, dropping from 738,000 ounces in Q1. Broken out, production amounted to 322,000 ounces of silver, 2,900 ounces of gold, 683,000 pounds of lead, and 854,000 pounds of zinc. Production was down across the board, with silver production declining 15%, while gold fell 13%, zinc fell 6%, and lead fell 2%. This follows tons mined dropping by 8% and tons milled dropping by 12%. Q2 represented the worst quarter of production in at least 2 years for Guanajuato, so naturally management did their best to get out in front of this. James Anderson, CEO of Guanajuato, was quoted in the related news release as stating that grade will be king in the second half of the year, with the company focusing on the quality of ounces produced rather than the quantity. Senior VP Rock Trotman, meanwhile, followed up that statement with the commentary that going forward, we will be emphasizing grade over tons and margin over total ounces as we establish a future-focused mining culture that is centered on discipline and growth. With that context in mind, silver grades in Q2 dropped to 107.4 grams per ton silver, down from 111 grams per ton silver, while recoveries dropped from 83.3% to 83.2%. It's not a huge drop there. Gold grades, meanwhile, moved from 1.01 grams per ton to 1.02 grams per ton, while recovery slipped from 80.8% to 79%. As for costing, cash cost per silver equivalent ounce increased, moving from $19.19 to $21.67 per ounce, a 13% increase. All-in sustaining costs also rose, climbing 13% from $23.41 to $26.38 an ounce. All right, so let's wrap it up. After things appeared to be looking up for Guanajuato in the first quarter of this year, their performance admittedly slid a bit in the second quarter. There was a bright spot or two in the form of maintaining consecutive quarters of positive adjusted EBITDA and mine operating income, but in this silver environment, I think the expectation from many is that they would be doing much better. Maybe this seemingly new mining strategy focusing on quality ounces will set things on a better path. Time will tell. All right, everybody, thanks for watching. If there's more stories you want us to cover, let us know in the comments section. We're always reading them, I promise. If you want more mining content, check out our website over at thedeepdive.ca. And if you enjoyed this video, do me a favor, smash that like button, subscribe, and ring that notification bell. All right, everybody, thanks for watching.